Today I wanted to the importance of having a trading journal. I didn't always have a trading journal. And what I'm going to do actually in this video, I'm just going to talk about my experience with having a trading journal and how I used it and how it has helped me. When I first started trading, when I was trading retail level, I wasn't journaling my trades or journaling anything really. The first time I actually saw somebody use a trading journal was when I started working professionally as a trader. It was at my first company I worked at, which was World Trade Securities. When I started working there, I saw that a lot of traders had a little book and they would write into it. And asking them, what are they writing in it? Why are they using it? It just brushes off, right? When you see somebody successful doing something, you want to mimic. And that's when I really started to journal for trading. And what I did, and I guess anybody or everybody does it their own way, and you're open to do it in whichever way works for you. But for me, I used it in this way. I actually had my book. It was called Rules of the Jungle. I wrote that on it in big. You can call your journal anything you want, but have it something meaningful. It's a little bit fun. And what I had in it on the first page is the rules that I had to follow. Because when I was starting to trade at this firm, I had a hard time following the rules that I had set for myself. And the reason for that is that at this firm, the strategy we were running was very short term. So it was scalping / market making. So you're getting in and getting out very quickly of trades. Basically, you're literally like buying something on the bid and trying to sell it at the ask and making 1 cent profit. But you're trading big volume. So you're buying 100,000 shares, selling 100,000 shares, you make 1 cent, and that's $1,000 profits. If it doesn't go your way and you think the stock is going to drop, you flat trade it for a $0 loss. But if you're not quick enough, you might lose a cent. So you're losing $1,000. So you have to make decisions very quickly and very fast. And if you're a little bit too slow on taking your losses could be very big. Because this was the first strategy that I have run professionally, I had to be really good with following my rules. I couldn't be slow. I didn't have a week to decide, no, actually, I have to get out of that trade. Let me get out of it. I had a second to decide and to click on the button. The first page of my trading journal was just rules. So example, one rule would be if the stock goes up 2 levels in a row, don't chase it. Wait for it to pull back before entering. It could be something else. It could be something like if there's news in the morning, don't trade for the first whatever hours. So any rules that I had for that strategy that I wanted to follow in the long run, I would put it on the first page. And every day, every morning when I got into the trading floor, I would open my book and I would read the first page of rules. At the end of each day, when I finished trading, I would add some notes. So for each day, I had this different page. And I would put in this page the amount of money I made. That's not the important part, but I would put the amount of money I made, the amount of trades, the date of the day. And then I would put if I did anything wrong. So how that works is it's not necessarily if I lost money or if I made money. Because sometimes you do something wrong, but you make money. So you do a bad trade, but you end up making money on this trade. And these are the worst type of trades. Why? Because your brain's going to be like, it made money, so let me do it again. But if you keep doing this type of trade, in the long run, you're just going to lose money. And sometimes you do a good trade and it loses money. But that's okay. If you keep repeating that trade, you'll make money in the long run. It doesn't matter if the trade made me money or if it didn't make me money. What matters if it was a correct trade or not. So for example, if there was news on something and I chased it and I got in and I made money, well, that's a bad trade. I know in the long run, it's not going to make me money because I have a track record. I see that historically, this type of trade doesn't work for me, so I shouldn't have done it. And if I did a bad trade, I would note it. That was a bad trade. I have to not redo it again. I would see if I have a rule that tells me not to do this type of trade. Now, if I don't have a rule, then I would add to my list of rules another rule that I have to abide by. And if I already had it, then I would put an asterisk on it, and I would really make sure that next time I follow through, and I would repeat it to myself several times before the trading day to make sure that I don't redo the same type of mistake again. Now, if you want to go a bit further, I understood that trading was really affected by our psychology. And this is why you can't know if somebody's going to be good in trading or not, because everybody has a different types of psychology. I read a lot about this. I actually read a lot of articles that look at human behavior and human biases that negatively affect us when we're trading, like status quo bias, endowment effect, a bunch of other biases. I'll actually link a few articles if you're interested in them in the description down below, so you can read on them. It's very important to understand what makes us do the things we make, right? Like, for example, status quo bias. Well, you're in a position and you prefer the status quo because you don't want to leave that position and get into another position, even though you have thousands of other options out there that you can go with, because you're afraid that if you get out of this position and you get into another position, well, what happens if the stock continues going up and you miss that opportunity. So the anticipation of future regret and future blaming yourself is so high that you decided to just stay in that position. These are types of biases that affect us. Anyways, I'm sidetracking, back to the point. If you read on these biases and you understand them, then in your journal, you can write in it. You can say, well, I was affected by this bias. I have to really watch out for this. Either read up on it more or put it on your rules page that you have to watch out for this bias to really understand yourself more. And this is really the key why a trading journal is important, because when you're losing in trading, it's because of your psychology. Again, I've sat down at trading firms where the guy next to me had a double PhD, was teaching economics at the university, and was trading for a year and never made a cent, couldn't make it. And the other guy next to me didn't have a secondary degree and was in the top 5 traders every single month. So what made the difference? This guy obviously had more knowledge than this guy, but this guy was better. And what I think made the difference is this person was too much emotionally involved. He had to be successful. He worked all his life to do this, so his emotions were so strong that they controlled him. This guy wasn't involved. He just got this job and he doesn't care if he's successful or not because he doesn't believe that he could be successful. So if he's not successful, well, okay, so what? So his emotions weren't controlling him as much. When he had to take loss, he just took the loss and moved on. But this guy, that was too involved, couldn't just take his losses and move on, because it meant too much for him. So your emotions have a big impact on you. And if you don't realize that, and if you don't work on it, you're not going to be successful. And having a trading journal so you can look at it and read it on different days when your emotions aren't controlling you, right? Because when you're trading, your emotions are high. But when you're not trading and you reread stuff, then you kind of understand and you know what you're doing right, what you're doing wrong. Then you can change things. So what I would do is literally do this every day that I traded, and I would change or add to my rules of the jungle. And every morning, without a question, I would take it, open it, and read all my rules and pound it in. And I would have the rules in different color schemes. So the ones that I already abide by, I know, but I still have them. I read them every day. They're there. But the ones that I have more difficulty with, on a day I see that I didn't do them correctly, and I add a little asterisk next to them, I really reread them several times in the morning. And that way, when I'm trading, I just think about it, right? It's like if you go to the casino and you tell yourself, you know what, if I lose $100, I'm leaving. But every time you lose $100, you don't leave. You just stay and you do the same thing. Well, if you had a journal and every time before you go in the casino, you read and it says in big, if you lose your $100, you have to leave. Several times you didn't do it, you have to do it or you'll never be successful. Okay, well, next time you go to the casino, you lose $100, you'll be like, no, I have to leave, and you just walk out. It helps you. Now, are you going to have to read this and do this every day for the rest of your life? No, I did this every day in the beginning. And when I started to be successful and I was okay, then I started to read it every couple of days, then every 3 days, then every 4, then every week, then every month. And then at one point, I stopped having a journal at all. Now, at one point I was trading and I restarted making mistakes. Like it was a long time after I had stopped using a journal. And then I realized that, hey, you know what? I really need to use a journal. And I used it for a bit. And then I got back to not needing it again. So it's really going to depend on you. You could have it for your whole career, or you can use it for the times that you need to use it and then gradually stop using it because all these behaviors are now part of you. So if you're a beginner trader, make sure to just buy a notebook from the dollar store and then use it as a trading journal. Now, I'm actually coming up with a video next week that's going to talk about the most important things in trading. And we're going to talk about trading psychology because I want to get more in depth in that. So make sure to subscribe, hit the bell icon for when that's out. Or if you're watching this video in a while, then check on our channel or there might be a link somewhere, but make sure to watch this video as well. And if you like this type of content, please hit the like button. It helps a lot with YouTube algorithm and helps this channel. And that being said, get yourself a journal and I'll see you guys at the next one.
Okay. Hopefully you guys got a little bit from what he was saying. I think two things stood out to me. If you're not journaling and you take a bad trade and it pays you, it's a negative reinforcement, right? It's a reason for you to continue taking those bad trades. And over time, maybe it pays you the first time, but you lose the next 4 times, right? In the trade setup like that. And it may not dawn on you. Maybe you're just getting frustrated. You feel like the market is singling you out or whatever the case may be. And The real problem is you deciding to take that bad trade setup. And also, he said he wrote his rules down, or if he violated one of his rules in his journal, he would write it in his journal. So when he opens his journal, he'll see that rule, right? We all say that we have rules for trading, but if you don't journal it, you don't have any rules, because you're not going to remember, and your endorphins are going to take over once you start trading, because that's what you live to do anyway. You just want to get into a trade. If you continue down that path, it'll continue to lead you to frustration and maybe a little anguish. The second thing is, do you even know what you're successful at? Like what trades actually pan out for you at a high clip? You might think you know, but if you never journal it, there's no proof. You can never go back and look, right? It's actually the reason why I fell in love with the daily order block. The daily order block, what paid off at such a high clip that it wasn't any reason for me to be on the 4-hour charts, right? Now you can, once you gain experience, you become better at the different time frames, but you have to find success first in one thing. And once you're successful in that one thing, you just duplicate it, wash, rinse, and repeat. You won't make as much money as somebody who's more versed in the market, but you'll make money. You'll be profitable. And that does a lot for your psyche, right? Once you've achieved profitability, it opens up a new level of you wanting to learn, right? But you're going to ride that one thing until you find the second thing that you do successfully. So the journal, man, it's I really can't stress the importance of it. And you don't have to have a trading journal, that records. It has entries for everything, like buy price, ask price, why did you take this trade, comments. Those are great, but you don't have to have that type of journal to be successful. You can just have a notebook that you write all that stuff down in. I think the journal with the entries are great for me, but maybe for you, maybe you just rather have a notebook that you write it down. Either way is fine, but you're going to have to make a decision and just start doing it. How was y'all's trading week? Did you meet your goals? Did you have goals for the week? All that kind of stuff matters, and it's going to affect you moving forward. And if you don't have any goals for the week, I mean, you could make $1,000 and then lose 2,000 after you make the 1,000 because you don't have any goals. Your goal is to trade, So if your goal is just to trade, everybody is accomplishing their goal. You shouldn't be mad that you're not profitable. You should just understand that you're accomplishing your goal, because every Sunday you hop in the market, you lose your money, and you're out by Tuesday or whatever. You accomplish your goal for that week, which is to trade. If your goal is to make money, then you'll approach it a little bit differently. Instead of just trading, you will do your homework on the weekend. You'll pick out a pair or several pairs that you're interested in. You'll do your analysis on that pair. You'll mark your charts. You'll set your alerts on that chart, and then you'll wait. And then once the week starts, those alerts will start going off. Then you will look to enter the trade. If you're just going to the market and you have a naked chart that you're looking at for the first time while the market is moving, good luck. You know, I'm not saying you can't be successful, but I would wager a great deal that you're not going to be successful because the market is moving. You haven't looked at it. You don't know what's going on. You don't know the news events, anything like that. So a journal will only help you, you know, and it's not the everything, the end all be all, but it is probably one of the more powerful tools, especially in the beginning, because it will highlight the things that help you. It will also highlight the things that hurt you, you know. And when I say highlight the things that hurt you, you're going to see those negative trades, and you know you'll eventually you'll start writing comments. You know, why you took the trade, maybe what time of day it was, you know, maybe if you were fatigued or whatever. You know, like you'll have that sort of information, and then you can start narrowing down when you trade. The funny thing about trading is the less you trade, the more successful you are. Okay. And, you know, as a swing trader, if I'm in a trade, if I'm already in a trade, if I pick up more positions or trade within that trade, I don't consider it a new trade. I mean, trade is going, it's an active trade and it's going to my destination. You know, now picking up positions in that trade or counter trend trading while that trade is active isn't considered, I don't consider that a new trade. But if you're like an intraday trader and you're taking, you know, 3 or 4 trades every day, I have a hard time believing you're going to win a lot. You know, if you're scalping, you know, I know they take more trades, but if you're scalping and you're taking 20 or 30 trades, you know, how many of those are you going to win? You know, I don't know where you're taking it to, but I have a hard time believing that your win percentage is going to be very high. I'm not saying that it's impossible, but if you don't have limits, if you don't have rules, if you don't have a journal that tracks your performance in those rules, you know, coming from where we're coming from, I just find it hard to believe that your level of success is going to increase week after week. So it's just food for thought. And, you know, please, you know, if you want to be successful, start journaling. We're going to move from the journal to your trading plan. Okay. What is your trading plan? Like, how do you attack the markets? What are you going to trade? When do you make that decision? What session are you going to trade? Does that even matter? And here's what I mean by that. If you're going to trade Euro USD, in your trading plan, I mean, are you going to say you're only going to trade that on the US session? I mean, is that a real reality when the setups happen on London and the US session? If you're going to just trade the US session and one of your alarms goes off on the London session, then you can't take that trade. You know, maybe you're asleep anyway. But, you know, most of us, when the setup happens, we want to take the trade. So those types of rules, you know, if you write them down, you need to follow them, you know, but you have to understand that that's going to steal opportunities from you as well, right? And I don't want you to be anxious or greedy, you know, trying to catch every opportunity. But when you mark that chart up on Saturday or Sunday, we can't mark the chart up and expect it to happen on a certain day or on a certain session. It's not how it works. It's going to happen whenever the market gets there, you know, and that's when I personally take the trade, is once the setup plays out, right? So you have a bias, you mark your charts up, and then the setup has to play out. if the setup plays out, your alarm goes up, you execute the trade, right? So in your trading plan, I think you need to start off with the goal you're trying to achieve, right? And it can't necessarily be the goal of I want to achieve profitability. Yeah, that's kind of vague, what size account you have. How about you start with a percentage, right? I want to achieve 5% this week, or I want to achieve, 3%, and then you attack that goal with a realistic plan. A 3%, if you're trying to gain 3%, I mean, and you have a 1 to 3 trade and you win that trade, that's 3%. Shut it down for the week, get back in your demo. I think most people would have a hard time doing that as well, because you want to come to the market and trade, but you have to understand that more trades you take, the more risk you put yourself in. So if you're doing things correctly, 3 trades a week will give you your 10%. Just think about that. 3 trades. You only need 3 to give you, 10%. If they're 3% a piece, that's 9%. Most of the time you're going to get a little bit more than your take profit. But if you win 3 trades, you win 9% every week. That's just on a 1 to 3. If you find the 1 to 4 setup, 3 trades is 12%. 1 to 5, 3 trades is 15%. So on and so forth. If you understand how to read the higher time frames, 1 to 7s, 1 to 8s, those are pretty easy or pretty routine, to pick up. So 3 trades in those scenarios will give you over 20%. So let's say you lose one of those trades, you lose 1%. You win 2 of those trades, you win 14 or 16% still. It's just, it depends on you as a trader, right? But if you don't have a plan, then you're just out there taking trades. So you have to follow your plan. So in your trading plan, you need to annotate, hey, my goal is X% this week, right? Or maybe it's that percent every week as a beginner. And now you just have to figure out how you're going to get to that percentage. Once you say my goal is this percentage, maybe you're just taking 1 to 4s. Maybe you're taking 1 to 5s. I'm not taking a trade unless it's a 1 to 5. That'll help you cross out a bunch of the trades that you might be taking now. Maybe you're not interested in a trade unless it's a 1 to 5. And that's a real rule. Maybe you see 3 of those this week and you're prepared to take all 3 of those. That way, if you lose 1, you lost 1%. And if you win 2, you won 10%. But if you don't write that in your book, it's not going to be part of your trading plan, and you'll be out there swinging at 1 to 3s. Maybe you lose a couple of 1 to 3s, and instead of quitting like you should, maybe you do something rash. So you have to figure that out as a trader, right? Now, your time of day. So most people work, so you can't trade at any time. Maybe you have to trade at a certain time, or maybe you have to consider trading while you're at work. And that requires either intraday or swinging, right? All of that matters, right? Because if you're going to trade while you're at work, you either have to have notification coming to your phone, or maybe you get into a trade that's playing out and you execute that trade and then you just go to work, right? If that's the case, you're going to have to trust your analysis. You're going to have to trust your stop loss. You have to trust your take profit, right? And some people just can't stand to look at trades. So when you take that trade, maybe you just trade with your computer at home, or you trade on your phone and you just delete the app once you enter your trade. I don't know what that looks like for you personally. I just know that some people have issues when it comes to looking at red. You know, we're traders, man. We're going to see red. Our account is going to be red. We're all going to experience drawdown, right? Even the best traders go into drawdown. Most of the time, when you click that button, buy or sell, you're going immediately into drawdown. So just understand that as a trader, if you use proper risk management in the first place, then your account can handle the drawdown, right? Because it's going to draw you down to a certain extent, then it's going to hit your stop loss. For me, it's going to hit my hedge. But you know, if you're not a hedge trader, then you're just going to hit your stop loss, which is fine. I mean, because it's a calculated risk. All of us take risk, right? Once it hits your risk, once it hits your stop loss, your trade idea expired. Go on to the next setup or wait for the next setup. You know, it's not a big deal. You lost 1%. It's not going to blow your account. It is what it is, right? So that's going to be very, very important to you, you know, as you go along this journey. So write down what trades you're taking, like risk to reward. Write down the percentage that you're risking. Okay. While I risk 1%, some people risk 2%, some people risk more, some people risk less. Right. I personally like the 1% because I don't want to be in the market more than I have to. So if I risk 1% and I make 8%, I only need 2 trades to give me 10%. You know, some people ask me why do I just chase the 10%? You know, and I'm like, well, how much money do you need? You know, like we don't make 10% a week at our jobs, so you have to be realistic when you start these goals. You know, your goal shouldn't be, oh, I'm going to make $1 million this week. You know, I mean, if that's the case, just buy lotto tickets and don't come back to trading. You know, you have a better chance. But if your goal is to have a start, you know, make 4%, make 5%, make 10%, those are realistic goals. And all it takes is to win 3 trades in a week, right? 3 trade setups will give you those percentages. And maybe you lose one of those trade setups and you miss your goal, but you still had a profitable week. You know, those are the types of things that lead to success in your trading journey, right? And maybe you don't win 10% every week. Maybe you win 8% every week. And if you consistently make 8%, man, I mean, billionaires will give you their money just so you can make 8%. So it's just a point that that's worth, like, you know, drumming in y'all's head. Pick your trades before the week starts. Understand the percentages that you're looking at, and you know you're going to make your money. Now, if you're trading wheel strategy, kind of hard to pick your points, right? So if you're trading wheel strategy, you're not going to be able to pick your percentages, right? Because you take what the market gives you and you're out. But what you could do is, if you make a certain percentage on your account, you can shut it down. And maybe you get in the group and you trade your demo with Will, right? It's nothing wrong with that. But if you lose 2% or, you know, whatever percentage, because if I lose 2 trades in a row before I win money, then I'm done that week. That's 2%. So you can apply that same strategy. If you lose 2% of your account, then you get in your demo and wheel strategy. You guys have to make up, I guess, these rules that are going to make you successful, and they're going to suck when you have to force yourself to follow them. But you know, that's what it's going to require for you to take your trading to the next level. If you never follow your rules, even if you have a great week and you make $80,000, the next week you're going to give it back because you don't follow your rules. and you'll overtrade and you'll lose your money. So your rules are what's going to keep you on the right path. It's going to keep you at a level of accountability, and it's going to keep you from blowing account after account after account. All right, because if you lose 2% this week, you have to wait a whole 7 days or whatever. If you lose 2% on Monday, you got to wait until next Sunday to get in the trade. And if your trade setup doesn't happen until Wednesday, it's longer than that. That keeps you from going and buying an account every week. I know about buying accounts every week. Been there, done that. What I'm telling you is, you write these goals down and you follow them. You don't treat them like the speed limit, but you actually follow them. And once you start doing that, your account will last longer and it'll actually start growing, because your trade setups will be based on your analysis, right? Based on what you're learning, or the concepts that are familiar, that you're familiar with, and that ring true for you, and you'll start making your money. So all that stuff needs to be written down in your trading plan. Be cautious about writing arbitrary things like, I'm only trading London session. And it's not arbitrary for everybody. Maybe you're up that time and you work a different shift and you have to just trade London session. Maybe you're a scalper and you're only available in London session. That's fine. But for the people who aren't in those situations and they can trade multiple sessions, if you're marking up a chart, you have to understand that maybe your setup is going to happen on a different session than than the New York session. Maybe your setup happens in London session before New York session starts. Maybe it happens at the end of New York session, and you have to carry this trade. Are you going to carry it over to the Asian session? Are you going to pay those swap fees, that kind of stuff? So all that stuff is important, and it needs to be written down in your trading plan. Okay, what are some other things that we need to put in our trading plan? Drop it in the chat. Unmute yourself. Come on, y'all.
What was the question, Ty? What are
some other things that need to go on your trading plan? We're helping people write trading plans today.
Gotcha.
Okay, entry and exit strategy. This is very important. Entry and exit strategy. Alicia, can you elaborate on what you mean by entry and exit?
Hey, fam. But I'm saying just your rules for entry and things that'll help you get out if the trade is not going your way, or even take profit levels.
Okay, that's beautiful. So I have, like the swing trading group that I spend the most time with. Whenever a setup happens, the number one question I'm always asked is, Todd, when are you getting in the trade? But what do you mean, when am I getting in the trade? What are you waiting on to get in the trade, right? So these are very good questions and very important questions, because you have to understand your own entry. What's a green light for you to enter? The alarm is going to go off and say your setup is ready, but hopefully you're not just going to jump in the trade, right? Hopefully you're going to wait. Once you go to the chart and you see that your setup is ready, hopefully you will wait for your entry signal or whatever, right? So let me give you an example of what I'm talking about. Here's a setup that I'm personally interested in this week, right? We have a bullish order block. I would like for the price to pull back, and then I want to enter the trade for the buy, right? So maybe this trade just pulls back to this level, right? If I'm just looking at this, I see this huge imbalance on this candle. I expect the trade to come back and mitigate this imbalance, you know, to the 50% mark. That would be where I would want to enter the trade, right? So I would personally enter this trade if I'm not awake, or if I'm not available to watch this live. I would enter this trade at this space, right? At this space, not what time frame do I use to enter? This space, this price, this price is where I'm going to enter, because it's going to come down and take out that imbalance, and it's going to start pushing back up. If I'm watching this trade, right? If I'm watching the trade when it comes down, I'll drop down to the 15-minute time frame. And this is just what I do, right? When I drop down to the 15-minute time frame and price mitigates this imbalance, what I want to see is that price break structure on this 15-minute chart level, because it's going to create structure coming down. What I want to see is the price to break a level of that structure, retest it, and then I'm in the trade for the buy. That's my my personal take profit. I mean, my personal entry method. It works for me, right? I'm fine with that. So everybody needs to have that for themselves. Some people might enter on the 5 minute. Some people enter on the 1 minute. You know, I rarely ever look at a 1 minute chart, but there are traders in this group that do that, which is fine. Maybe you don't look at 15 minutes. Maybe you use the 30 minute or the hour. I don't care personally what time frame that you're going to look at as a trader, right? What I care about is that you see your criteria check before you jump in this trade and buy it, right? Now, let's talk about take profit, man. Where would we take profit on this trade? So if you're a supply and demand trader, there's a zone right here. If you're an order block trader, there's a order block right here. This is a good spot to take your profit. Smart money concept says if this pushes down and picks you up, you should take profit at the top of this green candle every time, right? And that doesn't mean you have to take the entire trade off the table. You can take partials, but you should get some sort of payout right here. You should pocket some of your trade. I don't think there's anything wrong with that, but this is so close. I mean, this is the weekly chart. Maybe it's not as close as I think. Yeah, 15, 16 pips. I'm probably waiting until it hits this level, right? But that you have to decide where you're trying to take the trade to, and you want your risk reward to play out, right? So when I look at this order block right here, I have to decide where I want to enter the trade and what I want to protect, right? As far as a stop loss, or in my case, a hedge trade. So I have to scale down. You know, I personally like going down to the 2-hour level, but I have to scale down to look at what makes sense, right? So this imbalance is what I'm targeting, but maybe price pushes down to this order block, right? I have to wait to see. That's why the only way I would take a trade right here is if I wasn't available. Now, it might hit my stop loss, in my case, a hedge, right? And it might keep pushing down. So my analysis says that we're going to take care of this imbalance, which is cool. That analysis may or may not play out. Maybe it does take care of this imbalance, but it pushes down into this order block. right? That's important because if you're a stop loss trader and you get stopped out here, now you have one more opportunity to make this work for you. So you want to make sure before you hop into this trade at this order block that it's going to respect it. It's going to start turning around and pushing up. It's going to start breaking your structure. Then you can get in the trade and take it up, you know, to where we just talked about taking it up to this level, right? Maybe you take a partial at this high, maybe you take another partial at this high. I don't know how you guys want to take your partials, but it is important that you take your partials if your psyche is hurting, right? So you're going to have a lot of area here. You know, this trade will be, I don't know, 125 pips if it comes down. And this, I'm just eyeballing this, but to this imbalance, right? Maybe 200 or 175 pips if it goes to this order block. Yeah, maybe 165 pips from this order block. So if it goes to this order block, then my stop loss can be pretty tight. I don't care about the wicks. Maybe you do, but you can figure that out as a trader. That's a personal preference. But if I set my trade up like this, $161 pips. This is a 1 to 18 because it's an 8 pip stop loss to cover this order block on the 2-hour level. A 1 to 18 is, you just need one position, you know, and your goal is accomplished. If it comes down here and gives me a 1 to 18, I'm gonna have about 4 positions, and we're gonna flip that bad boy because it's the same trade, man. Like, it's gonna pull back several times before it goes up. It's just a matter of where the price is going. None of us know how deep this pullback is going to be. So you got to keep that in mind. The AUD has interest rate news coming out this week. Got to keep that in mind. We have to understand where we are, what day it is, what news events are happening, all that good stuff. And you can write all that stuff in your journal, not your rules, but your journal. You know, maybe one of your rules is you're not trading news. If that's your rule, then maybe you can't take this trade. Maybe you have to go for another trade. But, you know, when you write that kind of stuff down, you have to always be willing to come back and cross out that rule. Maybe that rule is not a good rule anymore. Maybe you're a better trader. Maybe you understand the news, right? Or the crumbs, the breadcrumbs that the pair puts out before the news, right? What do I mean by the breadcrumbs? I did a case study on a UJ trade. It explains it, you know, that's the best way I know how to explain it. If you know on the chart where your liquidity is, and before a news event, the price is hanging out closer to one level of liquidity than it is to the other, then you can pretty much expect price to wake up, because you know it wicks before the news. And then when the news hits, it's going to go to the other level. So price is hanging out here. I know that news is going to make this thing sell. So the best thing I can do for myself is put me a limit position right here. So when it wicks up, it wicks me in, and then it shoots down. Make a whole lot of money doing that. If we know that there's news coming out on Wednesday and this thing pushes down, and maybe it covers this imbalance on Tuesday night, you wake up Wednesday morning and price is right here, my position is going right here because it's going to wick down and then it's going to go up. So that kind of thing, when you start looking and paying attention to what's going on with price, and you can see the liquidity, then that kind of stuff pays big time dividends, right? And it's not about it's not about your technical analysis at that point. The technical analysis is just for you to recognize where the liquidity is, right? Okay, the liquidity is this order block, and maybe we'll take out these lows. So maybe you want to put your position right here. The wick down picks you up, and the actual news pushes you, gives you these 161 pips in like 15 seconds versus you waiting 3 days for this trade to push up. So I used to not trade news, but now I look forward to the news. But you just have, like, sometimes maybe it doesn't give itself away. If this is towards the middle, then maybe you're not comfortable with trading that. So don't trade it, right? But there will be several times that it will give it, the price will give itself away. That's why I'm able to, before the news events, to say, hey, man, I think this is going to happen. Or, sometimes I wake up and I look at the US 30 and the US 30 will be creeping up towards this liquidity, even though you have all this imbalance. And I'm like, well, the US 30 is dropping today. It's going to shoot up at the open, and then it's going to push down to that other liquidity. It's just because of the price has cheated. It's cheated to one side versus the other side. That's it. It's not any magical formula. It's just you understand the liquidity and what the market needs to accomplish, and you make a decision and you put your risk on it. You don't have to risk your entire account, man. Risk your 1%, risk a half a percent until you test it out yourself. But if you start doing this, your success level is going to skyrocket. But it's only going to skyrocket if you write it down. Write down what you saw. Write down, mark your liquidity on the chart. A lot of times on the charts, you'll see I have liquidity, or fair value gap, daily fair value gap, 4 hour, whatever. Write that stuff down, because if you just have these lines like I do right here, maybe you remember, but maybe you don't, right? And you'll be like, man, I marked this area up, because you don't know. You don't know why you marked the area up. And when price comes back to it, you won't be prepared to take the trade. Or maybe when price comes back to it, you have forgotten why you haven't marked up and you won't take the trade anyway. So that kind of stuff needs to be annotated in your rule book. Maybe you have success trading news events, and you're saying, hey, I will trade news events when price shows its hand, right? And what do we mean by show its hand? When price creeps up to this liquidity and leaves a space going to this liquidity, then we know we're going to get a wick and a sell, right? So that kind of stuff is crazy helpful when it comes to finding a little success. US 30. We just talked about this. US 30 has been on a tear. Long run, big picture, this is what I think is going to happen. I believe we'll push up. We'll take all these levels. All right. This arrow I put here a while back, man. This is a monthly order block, right? I believe we're going to push up into this order block. I believe that we might even take this high in this order block. We'll have to see how everything plays out. But one thing is for sure, the interest rate hikes, the game is still going on. So we'll still be raising interest rates. So when we start having that conversation again, or when we raise these interest rates, I believe that's when we'll get a sellout. But you guys paid attention to the news this week. The CPI number was off. It was down from what they expected. And the PPI number was also down from what they expected, which causes, the markets to rally. So if the markets rally, I mean, which they've been doing. I think they're going to rally for the next few weeks. So we have about, I don't know, 2.5, 3 weeks. When is the next FOMC meeting? I want to say it's probably the second week of next month. Don't quote me on that. I have to look at the news. But we're going to push up until then. We already knew we needed to push up because we had to take care of this liquidity. There's a fair value gap. There's an order block. There are several accomplishments. We had to take out this liquidity. We had another level of liquidity. We're going to take out all, we're going to do all of that, right? We had a very good push up this week. So we expect to see some level of pullback. We don't know how far we'll get for this pullback starting Sunday or Monday. It may pull back first, but then we're going higher, right? Tomorrow I will look at this and see where I think, we're pulling back to. This area I had marked up, I don't know, a couple of days ago when I dropped this sell right here in the indices chat. I was thinking that we would get to this fair value gap. We never got to it. So maybe this week we push to the fair value gap first and go up, or maybe we just leave this fair value gap for when the sell-off happens. This might be a point of entry, a point of interest as the market pushes down. Because at some point, we're going to cook with Crisco. We're going to crash. And just my opinion. And stuff with this Wednesday. Yeah, but those are meeting minutes. I'm talking about the actual FOMC, September 21st. Okay. Yeah, so we have a few weeks to make these gains happen. But don't get caught up in the trap of everything is all good, because we still have to raise some rates. You saying it's a red photo? Yeah, I understand that. It is going to affect the market. Here's what people want to know. They want to know if we're going to, if the Fed is going to still consider raising the rate 75 basis points, right? That's the truth. If the Fed backs off the 75 basis point talk, these prices will keep pushing up. All the news heads this week were talking about the odds of the Fed raising the interest rate 75 basis points fell from, 60-some% to 36%. So when you hear about them saying it's priced in, they're going, people were going to buy these indices up because they don't believe that we're going to aggressively raise those interest rates. So if that's the case, then the market will keep pushing up. What do I think is going to make the market push down at this area? I think that when that interest rate come out, it'll probably be 75 basis points. Here's the problem, man. The only reason we missed on those estimates is because the price of oil is down, right? I mean, if y'all bought a box of cereal lately, a gallon of water, milk, I mean, everything is dumb high, man. It's dumb. Everything is almost double, it seems like. So there's no way that I can see this being the norm, I mean, we'll see, but I can't picture that. So I'm going to trade this up until I get, a different confirmation, but I'm still biased for this to come up and sell off. And just because I'm biased for it to come up and sell off doesn't mean that I can sell this. I have to wait until it shows me that. I feel like some people will take their bias or even my bias and just start trading my bias, but you can't do that. You have to wait until the market gives you the setup to trade your bias. And if it never gives you your bias setup, you better trade the setup that the market is giving you the other direction. So as biased as I am for a sell, this is a weekly order block. This say we're going higher. So I got to trade up if I want to make money. The Nasdaq is the same way. All right, the Nasdaq doesn't have a weekly order block, but it does have a daily joint on it. We're going to take out these highs. You know, I wouldn't be surprised if the market goes up there Sunday night, takes out these highs, pulls back Monday, then goes up. But I think we have to accomplish the same thing. We got to take out these highs. There's an order block here that we will probably run. This is the zone that I anticipate us getting to. So we shall see. Just be patient in your setups. So what else needs to go in your rule book besides entry and exit strategy? Let me back up. Did everybody understand what I said about exit strategy? Drop a 2 in the chat if you still don't understand how to come up with your take profit. Drop a 2 if you don't understand how to come up with your take profit. So everybody understands. Okay. All right. What else? Somebody different, please. What else do we need for our trading plan? Bueller, anybody? Come on, y'all. Are y'all still here?
Todd, I think you said everything that we should have. The only other thing that I think maybe to add is to put serious details. Take a second and write down a couple of sentences of what our thought process was, why we chose it, what we were thinking at that time. But I think everything else you pretty much mentioned.
So listen, as far as writing details in your rules, I think you should leave the details for your journal, right? Your rule book is your what your setups are, like what you're going to risk, maybe what you're chasing, your target, your percentage per week, your entry and exit strategy. Your journal is what you were thinking, you know, why you chose this setup, what session it's on, what instrument you're trading, right? Those things go in your journal. You need a rule book and a journal. Now you can start changing your rules once you find evidence in your journal that something needs to be changed. But you're going to have to follow those rules, you know, before you start. I mean, you're going to have to journal before you can have the evidence to change the rule, right? It's two separate things. A journal is the actual what's going on. The rules is what's keeping you honest, right? Like those rules are going to keep your account alive. The journal is how you are executing those rules, right? So
okay, I'm sorry, I misunderstood. So for rules, only thing I would add I would put it in my rules is don't revenge trade, because I tend to do that sometimes.
Well, yeah, obviously that, you know, revenge trading is super important. But here's the thing with that. If you mark your chart up, right, on the weekend, and your alert goes off and you lose that trade, there's no other alert that's going to go off for you to take another trade. So why are you in a revenge trade? That's illegal anyway. So if you're only taking the trades that hit your alerts, how are you in a revenge trade? You either lost that trade or you won. So there is no reason for you to take a trade in revenge, right? So that in itself is you acting out of character. Revenge trading, there should be no opportunity to do that, because there's no alarm that's going to go off and say, okay, it's time to revenge trade. What we're going to start doing, or what I'm going to start doing, is maybe once a week, just getting on Zoom, maybe going live and trading, right? Now, here's the thing with that. It's going to be hard to determine a specific day, especially if we're trading when our alarms go off, right? So I think we need to kind of kick this around. If we just want to trade when the alarm goes off, or are y'all trying to find trades to scalp? I'm not the best scalper. I've gotten better, since this war has kicked off, but I'm probably not the best at scalping. I don't mind doing it, looking for trade setups, but I would, if it's up to me, I would rather trade a setup that I've anticipated and that my alarm has went off and I'm getting ready to get in the trade. So whenever I say I'm going to live trade, that's what I'm talking about. So I don't know what time it will be. I can just go and drop a message and be like, hey man, I'm on Zoom or whatever, if that works for you guys. But that's what in my mindset, that's what I'm thinking about whenever I say I want to live trade. So that's my intentions, maybe once a week doing live trading. And you guys are welcome to join. I'll just drop a message in the Discord when I'm on. That way we can talk about what's going on, what we're seeing, when to add another position, all that good stuff. Okay, anything else on your rules? Does anybody have rules that we didn't discuss?
Quick question. I just wanted to know, when you dropped the message in Discord about your live trading, where do you drop it? Because sometimes I feel like I miss.
Well, I'm going to drop it in general.
Okay.
I mean, that's a good rule, not to trade if you haven't done your weekly analysis and research the news. I mean, that's an excellent rule, because why would you trade somebody else's analysis? That's crazy. Yeah, always do your own analysis, man, always. And maybe you do your analysis and it's different from my analysis. Are you gonna feel better if you lose a trade, you traded my analysis and you didn't trade your own? So trade your own analysis, right? I like to see everybody's analysis too, because it gives me a different view. Maybe I see something in their analysis that I didn't see in mine. But at the end of the day, I'm looking for my analysis to play out. And if it doesn't play out, then I'm not getting in the trade, right? So just trade your own analysis, do your own analysis, and trade your setups. Maybe your analysis goes against you, but it is what it is. I'm always going to do my analysis on the weekend. I'm not waiting until the market is moving. I think there's a big advantage for the people who analyze the market while it's standing still. A huge advantage. I believe you have to understand on the weekly chart, you know, like the US 30, it's going to be a bullish week. If you never looked at that on the weekend, you just be out there floating. I think it's important to understand where we're at and where we need to go. And then along the week, you can corner the market. You know, like you can wait until the market, if you know this market is going to sell and it pushes up, man, all you're doing is waiting. It might start selling Tuesday. You can hop in that sell on Tuesday. You might not get out until Friday. You know, it's, to me, the huge advantage is seeing your setups before the market starts moving, before there's all that busyness, you know, before you get the conversations in the chats. Have your charts marked up, have your areas of interest identified, and then, you know, once your alerts start coming out, you can take your trades. But if doing your analysis while the market is moving works for you, by all means, man, like, do that. I just like to do it when it's quiet, when the market isn't moving. Okay, let's talk news real fast. US oil did exactly what I thought. Elfie, did you trade oil?
I did.
Oh, did it work out for you?
It did in the beginning.
Where did you get into trade?
At the beginning of the week, I got in, and it was good, I think, until Wednesday or so.
Elfie, did you trade this US oil setup that remember when I was saying, man, trade the US oil, you trading this Brent crap.
Right, I'm still in Brent.
Hey, man, this trade, man, this thing worked exactly. Look at that, man.
But it looks the same, doesn't it?
Well, I don't think that Brent works as well. Like, look, it traded up to the exact point. I mean, look at the drawdown.
On Wednesday, it actually retraced. I remember that. That's when I got out.
Yeah. Okay. Anyway, when I saw that, I just thought about you. I like, man, I meant to ask you about that the other day. All right. Tomorrow.
Check on the UK, please, real quick.
What'd you say?
Can you check on Brent oil real quick? Because I'm wondering if it actually does look the same.
I don't think. BCO. You see how inaccurate that is?
It looks the same. Okay.
The stop loss is a lot bigger than this. And I don't think this actually tapped.
It didn't.
That US oil was on the money.
But it needs to retrace anyway into that little order block right there.
Well, yeah, it does, but I had liked the setup better. I wasn't far off, but you know, it's just this was hard to to try to pinpoint exactly where it was going to go. I mean, how many pips? I wonder how many pips that was that it missed. That would be frustrating. You got in, you got in for the sale, or you bought it up before it sold?
I did buy it up, and I wanted to get into the sell, but I did not get to it yet.
Wow, that was pretty close. All right, so we'll wrap this up, but tomorrow, when we do the analysis, maybe you can do your own analysis today. And when you show up tomorrow, when we break these down together, maybe you'll see if you came up with the same thing. I'm going to analyze my charts today.
Okay.
And then at 11 tomorrow, you know, I know some of you guys will be at church. We can drop the trade ideas in the trade ideas, but we just want to analyze the pairs coming out. There isn't overwhelming news events. There is for the British pound this week. British pound has a lot of news. In fact, I'm looking to trade the British pound to the downside. You know, they had some bad gross domestic product news, and I don't expect them to get any better. I think EJ and GJ will probably drop. You know, we can analyze those pair tomorrow, but the only U.S. news, I think we have the meeting minutes. I think people want to understand, or they want to see if the Fed is going to back off its hawkish statements. That they want to think that we're only going to raise the interest rates 50 basis points instead of the 75 basis points. So do your analysis, and we'll meet back here tomorrow and break down these charts. Thank you guys for showing up.
Thank you.
Yes, ma'am.